So to our audience here, I'm very pleased to introduce our next presenter, Brett Novey, Chief Executive Officer of PharmaCann. PharmaCann is one of America's largest privately held cannabis companies. It operates in some of the nation's most attractive limited license cannabis markets, including its home state of Illinois, Pennsylvania, Ohio, and Massachusetts, to name just a few of its very active markets. The company projects revenue of $175 million this year, more than double from 2019 levels, as it benefits from surging customer and patient demand in several key markets. I'd like to turn the call over to Brett now to tell us more about PharmaCann and the opportunities ahead. So Brett, please go ahead.
Sure, thanks, Andrew. As Andrew mentioned, my name is Brett Novey. I'm the CEO for PharmaCann. And by way of this presentation, I hope to sort of introduce everybody, provide a more in-depth overview about who we are, sort of articulate the opportunity ahead for PharmaCann and how we're executing against that opportunity. So sorry, Andrew, how do I scroll?
You should be able to click through the presentation, or let us know if you continue to experience difficulties there.
Are you guys in control? I could just have you click through for me. There we go. I'll just let you know when to, as you mentioned, it wouldn't be a Zoom call without a little hiccup, technology hiccup. So who is PharmaCann? PharmaCann is one of the largest privately held, vertically integrated cannabis companies in the United States. As Andrew mentioned, we were founded in 2014 in Illinois, when Illinois launched its medical program. We were actually the largest awardee by count of licenses. So back in 2014, we were awarded 6 licenses, 2 cultivation and processing licenses, and 4 dispensary licenses. Shortly after the announcement of the Illinois awards, New York announced a similar medical application program. PharmaCann applied, and then in July of 2015, PharmaCann had the #1 ranked application in New York. So within a year, the foundation for our multi-state platform was in place. And in New York, we complemented our licenses in Illinois with a vertical license in New York that included a cultivation and processing license and 4 dispensaries in New York State. So since that time, since the awarding of the New York license, we've very thoughtfully and methodically continued to expand and build our footprint, primarily in the northeast part of the United States, as you can see on the screen. And we refer to this as the I-80 corridor. So we have Illinois sort of anchoring our footprint on the western part of the country, and then Massachusetts anchoring our footprint on the eastern part of the country. And through this footprint, we touch 89 million people. And we believe that if we're able to achieve a very reasonable 8% market share in our current states, in our current operations, under a full adult use legalization framework, that this is a $1 billion revenue opportunity for PharmaCann. And so how are we executing towards this $1 billion revenue opportunity? Andrew, if you could scroll to the next slide. We're doing it from our foundation for growth. So we sort of think about it in 3 components. The first is people or team. The second is operations. And then the third puzzle piece is our strong financial discipline. So we've hired the right leaders with the right experience, and our team it's fortified now. We have individuals on our leadership team that have worked together for decades, and a wide breadth of experiences on our leadership team that are very complementary. So people that have worked together at startups and have transacted successful exits, and we have experience leading large $1 billion Fortune 500 publicly traded companies as well. The operations piece is, we strive to be fully vertical in all the states that we operate. We currently have the rights to open through our licenses 32 facilities And we will have all those open by early Q2 of next year, so April timeframe of 2021. Today, 17 of those 32 facilities are operational and generating revenue. So lots of revenue upside, lots of revenue growth in the next 6 to 9 months and beyond relative to what we've been able to achieve even here recently in the first half of 2020. When we think about operations, we think about building a scalable business. And this goes back to a lot of our ties in the financial services industry. Specifically, a lot of the leadership team worked for a high frequency trading firm. And we were very familiar with the concept of, we had this technology, we call it the technology stack, this technology infrastructure that allowed us to very seamlessly trade any security on any exchange in the world. And so we understand the importance of scalability, especially in an industry like cannabis, where product obviously cannot cross state lines, but what can cross state lines is people and IP. And so we've really focused our back office on, through the implementation, as far as we know, we were one of the very first companies in 2016 to implement an ERP system. We subsequently have upgraded that ERP system. Everything's integrated from our technology, which is standardized, that gets implemented anytime we enter a new state, open a new asset, or acquire a new business, and similarly with our ERP structure. So that's our focus, scalability of our operations. And then we overlay on top of everything we do a very strong financial discipline. Coming from the financial services industry, we've seen it time and time again. And it's one of the reasons we've focused so hard at PharmaCann on trying to maintain a very strong balance sheet. It's because it's happened numerous times where there's a good business or a great business that has, a bad balance sheet and an opportunistic creditor group, and the business has one soft quarter or two soft quarters, and then they're in a challenging environment with respect to their creditors. So we focus very hard at PharmaCann at making sure we have a very simple capital structure, easily understandable. We also focus on making sure that we have a very clean, straightforward balance sheet, and we focus on every dollar that we raise. We focus on the best use for that dollar, the next best use for that investment of that dollar to deliver high ROI returns and increase our shareholder value. And so if you look at what we've done to date over the first 5 to 6 years of our existence, we've raised approximately $170 million of equity, and we expect that $170 million of equity to deliver a business that is generating $100 million of EBITDA in 2022 with the assets that we already control today. And then obviously we expect that to grow substantially from 2022 and beyond. So that EBITDA estimate assumes no changes in market structure with respect to transitioning medical markets to recreational markets in any of the states that we operate. So we're applying this financial discipline, this approach to our operational priorities. And Andrew, if you go to the next slide, our operational priorities are very simple. There's 3 buckets: grow, deepen, and expand. So the grow component is our number 1 priority, which relates to our existing core operations. And it's basically open all of our current facilities and maximize that opportunity. The second piece of our operational priority is deepen, which is basically acquire licenses in states where we're currently operating below the regulatory caps. And so this speaks to the scalability of our operations from the previous slide, which is you have this sophisticated compliance, legal, accounting, back office to support an operation in these states. And you want to leverage that expertise, that knowledge, that cost to maximize the output and to operate as many licenses as you can in each of those environments. The third piece is the expand piece, and this is expand into new markets that we're not currently operating. First, within our current footprint, so within that I-80 corridor, the northeast part of the United States, and then second, outside of that footprint, and outside of our current I-80 corridor footprint. I think we take a very disciplined approach to this expansion bucket. We don't take it lightly. As I mentioned previously, one of the things we consider is the fact that product can't move across state lines, but people and IP can. And so the way we've approached this historically is we've benefited from no employees being further than one time zone apart or a 2-hour flight apart. And that's how we're able to move people and IP seamlessly across our footprint. And it allows us to keep that sort of back office infrastructure down relative to trying to manage a business that's on each coast of the United States, on the East Coast and the West Coast. Yep, thanks. So how do we prioritize our expansion bucket? So just going back to the previous slide, I'll just make a comment. You don't need to slide back, but the first 2 phases of our operational plan are mostly complete. As I mentioned, we expect to have the remainder of our licenses operational by early Q2 of next year. Similarly, we have a robust M&A pipeline of tuck-in acquisitions that we expect. We're optimistic that we can hopefully close along that same timeline. And so then we'll begin to sort of focus on the other piece, the expansion component. And we'll view that expansion through the same lens that we viewed our initial growth, our initial expansion in. And that's through a lens it's an intersection of states with large populations and also limited licenses. And so this obviously creates a moat around those businesses. Similarly, these states with limited licenses tend to have higher regulatory compliance requirements where we do well. And that allows us to be influential with respect to how these states sort of transition their programs. If you think about a lot of these states where we operate historically, no state goes from no medical cannabis program at all to full recreational. There's steps along the way, and it can be a very restrictive medical program, and then maybe it matures and expands to allow additional qualifying conditions and additional forms of consumption. And then ultimately it transitions into a recreational environment. And by being a trusted player with the regulators in these states early on, all along the way, we're able to help inform a lot of the expansion, and we're able to benefit as a legacy participant in these markets from a lot of this expansion. And I think Illinois is the best example for us. And the way that Illinois expanded from a medical program to an adult use program was very thoughtful, and they built upon the success of their medical program to expand and put in place a framework, which I think is created the best recreational market in the United States. So this approach sort of translates to our current portfolio, which is on the next slide. Again, I mentioned 32 facilities, 5 cultivation processing facilities, 27 dispensaries, 7 states, touching 89 million people. And we are clearly positioned to do very well in 3 of the most important markets in this country. 1 is Illinois, 2 is New York, and 3 is Pennsylvania. And with respect to our progress in Illinois, currently, as I mentioned, we have a cultivation processing license and 8 dispensaries that are all located either in or around the neighboring Chicago suburbs. And so we have 4 stores open today, and we expect to have the final 4 stores open and operating by the end of this year. New York, I mentioned, full vertical. Maryland's an area where we have 1 dispensary currently, and that's a good example of our deep and operational priority, where we're currently actively trying to identify other opportunities to acquire assets to bring us up to the regulatory cap. Ohio is another great market that is sort of people are overlooking a little bit today. because everybody, the dialogue today is all about New Jersey and Arizona for the obvious reasons, and New York and Pennsylvania. Ohio is a market we really like. We're fully vertical in Ohio. Our cultivation and processing facility is open and generating assets. We have a dispensary there. This is another example of a state where we're looking to add additional licenses to move closer to that regulatory cap. Massachusetts, production, cultivation, operational. 2 out of our 3 dispensaries open. We'll have our 3rd open at the end of Q1, early Q2 of next year. And then similarly, Pennsylvania, we currently have 2 operational dispensaries, and we'll have the next 7 built out and operating during Q1 of next year. And our cultivation and processing facility should be completed and operational by the end of this year. So this is our current footprint. We've done all of this with the $170 million of equity that we've raised to date. We have done all of this very thoughtfully and methodically. And what that is going to deliver, if you flip to the next slide, is a business that we expect to generate near $175 million in revenues in 2020. We expect to grow that 60% organically into 2021, and we expect to grow that another 37% organically into 2022. And the point of this slide is that there's substantial upside here for as we very strategically and thoughtfully do high IRR M&A, as any of these markets that we discuss transition to recreational. There's significant upside to these revenue projections, all with the sort of opportunity of a $1 billion revenue business, again, in a world where there is a full legalization in the states that we operate, and we're able to achieve an 8% market share. So, that was just a very quick primer on PharmaCann, who we are, where we've come from, and what we're trying to accomplish. And so Andrew, I'm happy to answer any questions, and apologies for the technical difficulties. I hope it wasn't. I hope everybody was able to follow along. So.
Again, it's not a proper conference if we don't have 1 or 2. But Brett, thank you very much for joining us today. I'll kick off the Q&A here, though I see some incoming questions from the audience. Brett, as head of one of the largest privately held cannabis companies in the U.S., I thought you might have an interesting perspective on the capital markets and on private company valuations. So we've seen the share prices of many publicly traded cannabis companies in the U.S. Expand significantly over the past 5 months. Are you seeing similar increases to the private market valuations, and how does that impact your ability to complete M&A in this space?
Sure. So from my perspective, obviously the private deals get comped off the public comps, right? Unfortunately, we haven't tested the market recently, so it's hard for me to know exactly where the market is. Obviously, the best way to know where the market is for private companies is to try to raise capital as a private company in the markets. I'll tell you, I do think that there's a bifurcation for sure that's happening between the companies with great assets, strong management teams that are performing, that are close to or are already cash flow positive, and versus those that have challenging balance sheets that are a long way. There's not a clear line of sight into those businesses becoming cash flow positive. There's certainly a separation in multiples between those 2 buckets. There's also a big difference on the M&A aspect if you're trying to buy a single asset with cash versus a larger transaction with equity, right? So you're gonna get a better price relative to any multiple if you're a cash buyer versus if you're trying to use private company stock to do a transaction. So right now, we're focused mostly on that operational priority that I mentioned, which is the deepen priority. So we're looking to add with cash some very strategic tuck-in M&A opportunities, private, smaller assets, not big transformative deals. And those multiples that we're paying are certainly less than where a lot of the larger MSOs, what they're trading at, right? So it's I can't really speak to what M&A multiples look like for the big, more transformative step deal changes, because we're just not candidly looking at those types of opportunities right now.
I appreciate that, those insights, Brett. Want to ask one from the audience now. Just given your your plans to expand in future markets, what's your idea of getting into a market such as New Jersey, or are there any other markets that are on your radar that you would like to add to your portfolio, sometime in the near future?
So you nailed it. It's no secret, New Jersey, we love. It's in our footprint. It checks all of our boxes with respect to how we strategically look at expansion. So that's a state where we have an application pending from the last application cycle. I can't even recall how long ago it was, but I think it was late 2019. So we do have an application on file, and we partnered with a group on that application. So we're optimistic that we could win when they do announce those awards. The timing of that is sort of, the last I heard is that potentially as late as end of this year. That said, we are searching for ways to enter the New Jersey market. That's a market that we like. Other markets that are interesting to us that are sort of outside of our current I-80 corridor Northeast footprint. Florida is one that's attractive to us. And obviously there's one leader in that state, and we all know who that is. And they have done just an amazing job building out their operations and dominating the state of Florida. We're not really interested in entering Florida and sinking a couple $100 million of capital into it. We're interested in Florida through some sort of partnership or M&A with an existing operator that is, a top player in that state. So we're looking to Florida. That's sort of the next level of our strategy, which is that's a state that is still within one time zone, a reasonable flight. So Florida's a market that we're actively looking in. And then obviously when you take away that state, or when you look further down the line, a state like Arizona, and would be the next target. So I think if we were laying it out what we're trying to execute, what our priority would be, it would be New Jersey, Florida, and in Arizona would sort of be that first tier bucket.
Appreciate the color there. I just wanted to touch on some of the financial projections in your slides. When we look at those financial projections, it obviously shows significant growth, assuming, within the current regulatory structure. So what's driving the growth behind those forecasts? Is it mostly on the wholesale side, the retail side? Are there any state markets in particular that are over contributing or are taking a greater share of the overall revenue mix? Could you maybe touch on, how you
so both wholesale and retail. Obviously, Illinois is a huge driver of the growth. As I mentioned, right now, currently we have 4 dispensaries open. We expect to have 4 more open by the end of this year. So a big portion of the 2021 revenue growth is Illinois and also Pennsylvania. Pennsylvania is a great market. Currently only have 2 stores contributing to revenue. Expect next year to have a full 9 stores contributing to our revenue. And then on the cultivation side, we are just bringing our Illinois cultivation expansion is completed. We are propagating the zones, and we expect our first harvest out of Illinois in December. So that'll be a huge driver of additional revenues next year. Our Ohio cultivation facility, and similarly our Massachusetts cultivation facility and Pennsylvania cultivation facility. So as you think about growth, it's going to come mostly from our underlying business and just us opening those facilities and then driving organic growth through those facilities.
Great. And if I could touch on one of those markets, perhaps in a little bit more detail, Illinois, obviously a market that transitioned to adult use sales earlier this year, and we've seen the explosive growth since. Just wanted to get your thoughts on what you're seeing on the ground there, and how that is building. And I would also, if you had any lessons learned from that market as you go forward, and with more markets expected to transition to adult use, how you could apply those to other markets in your portfolio.
Yeah, of course. I love that question. What we're seeing on the ground is just demand that well exceeds supply dynamics right now. There's a big there's an imbalance currently between supply and demand, and we do think that eventually a lot of this cultivation production capacity will catch up with the market. But it doesn't seem like it's going to be anytime soon. Maybe by the end of next year-ish, it'll start to flip and there'll be adequate supply. But I just believe that Illinois is one of the strongest markets for cannabis operators in the country. You have pricing, which is holding strong. You have extraordinary demand. And you have a market that's just growing exponentially month over month since the beginning, and expected to get a lot bigger too, right? I think I've seen some estimates for the state as big as $3 billion. So if it really is a $3 billion state, there's a lot of room to the upside there as well. What we've learned is a lot, and how we're going to apply that learning specifically is our focus on New York, right? In New York, we have a strong, we're positioned very well. 35 to 40% of that entire market from a product perspective is PharmaCann product. So if you take into account the products sold monthly through our retail stores and through our third-party partners, 40% roughly, it fluctuates month to month, but up to 40% of the product sold in that state any given month is PharmaCann product. So you just sort of play that forward, and you take what we've learned in Illinois and you apply it to New York. We have a 140,000 square foot facility in New York, and we're looking to expand on that now. One of two things is going to happen, and they're not mutually exclusive. There may be an expansion of the medical program. There may be adult use framework that comes into play. Certainly, if New Jersey goes recreational this fall, we think that even gives more tailwinds to the legalization efforts in New York headed into Q1, Q2 of next year. And so we're expanding that facility. We're stockpiling distillate stock. We're stockpiling inventory, and we're going to be in a position in New York to really maintain our position. Are we going to be 35 to 40% no, of course not. But we think we can be high teens market share in New York in an adult use environment.
Well, thank you very much, Brett, for joining us today. We just, passed our cutoff here, but we really appreciate you taking the time to speak with us today, and look forward to discussing more in the future.
All right, thank you, Andrew. Appreciate it.